Okay. And share my screen with you so that you can see what I see. Okay. All right. So I'm not so sure how far we are going to get today. Okay. The last time I saw most of you, the last exercise that we did together, or we actually just introduced depreciation. Okay. And we did two exercises. I think it was 3.1 and 3.3. Okay. So on the YouTube channel, I've done your homework, which I gave you, which was to do 3.2, 3.4, 3.5, and 3.6. Okay, so that's all on the YouTube channel. You guys can go and view those exercises. Okay, and please do view them, see what you did, see if it's in line with you know what we did in class, and what we did on the YouTube channel. Okay, because this is one of those units. If you don't practice, it will expose you. Okay, right. Just waiting for this to load so we can get to. I want us to do 3.7 together. 3.7 together. So if we can quickly turn to question 3.7 or activity 3.7 in your textbooks. Yes, yes, yes. Activity 3.7. Okay. Actually, you know what? I don't need to actually display this right now. I can display this a bit later. Okay, this just waiting for it to get sorted out. Should do. So now. Oof. No. That's not what we're looking for. Right, but I think whilst it's loading, yeah, there we go. Now it looks proper. Okay, let's just zoom in. I know someone's about to, sir, can you please zoom? I know. I'm zooming in now. All right, cool. So let's read this question. Let's see what's going on over there. Okay. And guys, if you got questions, please do ask. Okay. Right. What's going on in 3.7 is, let's see under the required there, it says, show the accounts affected by the sale of the vehicle in the general ledger, right, of Enterprises as from 1 April 2008 to 31 March 2010. Okay, show the entries in the sales for the sales transactions in the general journal before posting to the general ledger was done. Okay. Right, so they want us to show the effect of the sale of a vehicle, all right, both in the general journal and in the general ledger, okay? And then it says up top there, on 31 March 2010, all right, after all depreciation for the year has been written off, okay, a registered VAT vendor sold their only vehicle, a blue Mazda Bucky, all right, on credit, all right, for 74,175, including VAT. Okay. Moment you see including VAT, you know that we need to remove the VAT, okay? But we'll do that as we go along. Now, what else do we see? We also see that Porcupine Enterprises, they've given us the asset register. All right, they've given us the asset register, and if you look in that table, you'll see their date purchased 1 April 2008. Okay, you see from who we purchased, you see the cost price of 100,625 rand. All right, cash, that's the cost to us, including VAT. Okay, then you can see the depreciation rate of 20% on reducing balance method. Okay, then you can see who we sold it to. Jaden's motors. Okay, then you can see date sold 31 March 2010. Okay, then the selling price again, and then they're giving us, can you see there, the depreciation. Okay, so from the on the date of 31 March 2009, which is their year end. Okay, all right, you can see that's the depreciation that we had for that period, and that was, we only bought this when 30 March, when was this? 1 April 2008. Okay, so that wasn't a full year. Okay, or was it? No, it actually was a full year. It was a full year. Okay, and then you have 17,000, okay, 500 depreciation, and that's the same as the accumulated depreciation. Okay, because that's the first period that it depreciated. Then we go to the next year, we see 31 March 2010. Yeah, okay, yeah, 2010. And then there you see 14,000. And then the accumulated depreciation of 31,500. Then we go on, 31 March, this should be 2011. Okay, and there you see the depreciation of 11,200, and then the depreciation there, the accumulated depreciation, sorry, is 41,700. Okay, so I think this is actually for 2011, not 2010. Okay, so just take note of that. Okay, but that's fine. We're going to get into it nonetheless. So what are we doing here? We're recording the disposal of an asset. Because remember they say, and we're always going to start in the general journal before we go to the general ledger. You guys should know that about me by now. So we're starting with part B, which says show the entries for the sales transaction in the general ledger before posting to the ledger was done. Okay, so let's get into that. Fortunately, usually they would actually make us do all of the calculations. Okay, but now fortunately they've given us that table, and that's why I took the time to go through that table. Okay, so what we are then doing is we're saying, okay, we then need to look at our steps. Okay, and I'm going to pull this out, and guys, I hope all of us have this on the WhatsApp group, so please pull it out. I'm going to quickly show you what I'm talking about. Okay, Varsity College. Let's see. Lecturers. Yes, that's where we want to be. And we are in Unit 3. Okay, so this is the slide. I'm going to show you now the slide that I want you guys to be looking at right now. Okay. Okay, sometime today. I think I have too many things open. Okay, close this. Okay. Okay, that's fine. Cool. So this is the slide that I'm talking about right here. All right, because we had an asset disposal. Okay, and I'm actually just going to from current screen. Okay, I want you guys to have this in front of you right now on your cell phones. Remember I said share this on the WhatsApp group. We're also going to use the other one later today. Okay, guys, if you have any questions, you're going to have to actually use the mic, because I won't hear you. I won't hear you if you just throw something in the chat. So please, please, please take advantage of the mic. Okay, at least to get my attention. All right, so you can type your question. If you don't feel comfortable speaking, you can type your question and then just switch on the mic and then get my attention, and I'll have a look at whatever you are asking. So right, we have this now. We have this in front of us, the steps. So if we look at our asset disposal, can you see? the first step there is to take the initial cost price out of the book. The cost price of what? The asset. Okay? So we're going to credit the asset account, all right, to remove that, all right? And then we're going to debit asset disposal. Why are we doing that? We're doing that because, remember, assets increase on the debit side, all right? So since they increase on the debit side, this thing should have a debit balance, okay? So now, since it's been having a debit balance this whole time, to remove it, we then obviously need to credit, okay? So this vehicle, we're removing the cost price. And if we look at our table, okay, before I go there, let's just go vehicle. Okay, this is the vehicle that was sold. We're removing that price out of. But now, to do that, what are we saying? We're saying, okay, the vehicle's cost inclusive of that was 100,000. How much? 100,625. So 625. Okay, we want the VAT exclusive. So we're saying times 100 divided by 115. Okay, and if you calculate that, so let's calculate that together. Where's my calculator? So what do we want? So we're saying 100 divided by 115 equals, okay, and then times this 100,625. And what do we get? We get 87,500. Okay, cool. So that's 87,500. Okay. And then we said we're going to debit asset disposal. Okay. And we're going to debit that by the same amount, 87,500. For those of you who actually did your homework, did activity 3.6, you'll find that it's very similar to this one. Okay. And here you can just say transferring initial cost or removal of asset cost. Let me just say asset cost. Okay, it's fine. Done. That's your narration. Then step number 2. What is step number 2? Let's see. Let's go back again to our process. We've done step number 1. Step number 2 says take accumulated depreciation out of the books. Okay, all right, cool. Accumulated depreciation. What is accumulated depreciation? All the depreciation that we've had on this asset up until, or should I say, all of the depreciation on this asset for as long as we've had that asset. Okay, so if you look in that table right there, you'll see that they've done all the calculations, and you see there to the 31st of March 2011, you'll see there it says 42,700. Okay, so that's the accumulated depreciation that we've had. Okay, because remember, we sold it on the very last day of the financial year, which if you see date sold there, it says 31 March 2011, and this is the accumulated depreciation that we last had was 31 March 2011. So we can just use that right there. So again, we say to ourselves, okay, accumulated depreciation we know is a negative asset. So what are we debiting? What are we crediting? Okay, since it's a negative asset, it increases on the credit side. So now to remove it, okay, as our step 2 is instructing, to remove it, we need to debit accumulated depreciation and we need to credit asset disposal. Okay, right. So we are debiting accumulated. Okay, and we are crediting asset disposal. Okay. Here again, you can say transferring. This time I'll say transferring. cum dip to asset. This is becoming too long. Disposal. So maybe you want to just say removal of accumulated depreciation. That would be easier. It would be shorter. Okay, more concise and to the point. Save you time as well. And we said we are debiting the 42,700. Okay, and we're crediting the same 42,700. Okay. Remember, this what we're doing here is an asset disposal. Since we're selling this asset, it's no longer, we don't want it on our books anymore. That's why we do this. We don't want it on our books anymore, and that's why we're removing. That's why we're removing the asset from our books and taking the steps that we are obviously then taking. Okay, cool. So now that we finished step number 2, let me see if there are any questions or thoughts. Okay, everybody seems to be good for now. Okay, which is cool. Right. So then we move on to step number 3. And if we look at step number 3, okay, let's just do this now. I see it's not allowing me to. Okay, I know what I need to do. I actually need to click on it. Okay, there we go. So step number 3 is now to record the selling price. All right, we need to record the disposal. Okay, because sometimes we're not selling it, sometimes we're trading it in. Okay, so step number 3 is to record the disposal of the asset. Okay, all right, no problem. Now, in this case, what happened? We did indeed actually sell it. But now the question is, did we sell it for cash or on credit? Somebody tell me there in the chat, did we sell this thing for cash or on credit? I like that. Somebody is quick with their finger. Thank you, Abigail, 100%. We sold this thing on credit. How do we know that? Somebody tell me, how do we know that we sold it on credit? How do we know? How do we know that? Come, guys. I know we're online, but doesn't mean I have to be talking to myself. How do we know that we sold this thing on credit? How did you know, Abigail? And I'm asking the class, I don't want to put it on the spot. There's a credit invoice, okay? Thank you so much. A selling price is written off. Well. No, not necessarily. I don't know if that's in response to the question, but yes, 100%. It is because we have a credit invoice, okay? So let's quickly then go back to our question. Okay, now how do we record this? We sold this on credit. So what does that mean? We now have a debtor. Okay, so here already, so you can use this document that I've given you, this slide that you should have in your WhatsApp groups to guide you. See, so since we have a debtor, can you see here? If it was a cash sale, it would have affected bank. That's why I put cash sale here in red and then bank. But now it's a debtor, so we sold on credit. Can you see that? So that's why I'm saying a debtor now has been created, okay? Right, and if we sold on hire purchase, which we'll see in one of the exercises we'll do, all right, you would then credit the creditor. So here we're going to say that debtors control, and in brackets you can actually write the name of this debtor, who is, it's Jaden's Motors. So Jaden Motors. Okay, and how much did we sell this thing for? We sold it for 74,175. 74,175. Okay. But now, can you see this is inclusive of VAT? Okay. This is inclusive of VAT. So we want to know, okay, how much of this is ours, okay, right? How much of it is coming to us? Because obviously, if we sold it inclusive of VAT, whenever we make a sale, we know that we have output VAT. Okay, we owe SARS money. So let's quickly calculate that. We're saying 74,175 times 15 divided by 115. Okay, and what do we get over there? Let's see. Okay, calculator, come and assist us once again. So we're saying 15, we want the VAT portion, divided by 115, because we know this amount is inclusive of VAT, then times 74,175. Boom. And we get 9,675. So 9,675. Here we go. Now we know the difference between those two will then go to the asset disposal account. Asset disposal. Okay. Okay, so let's do that in brackets as well. 74,175 minus 9,675. Alrighty, and let's calculate that. So yeah, I'm just gonna say minus 74,175, and what do we get? We get 64,500. Okay, 64,500. There we go. All right, can you see? What we have on the credit side is equal to what we have on the debit side. Okay, so that's step number 3. That's step number 3. Okay. Step number 4, we're now here. All right, step number 4, we're in the general ledger. We're now calculating, did we make a profit or a loss on disposal? Did we make a profit and a loss on disposal? And if you guys did your homework, you would have seen that in question 3 point, is it 3.5? No, 3.4. Question 3.4. You actually practiced how to calculate whether you made a profit or a loss. Okay, so I'm just going to recap quickly here. Someone throw something in the chat. It's a profit. Okay, cool, no problem. Let's see. Let's calculate it together now. So selling price, I'm just going to say SP minus your carrying value, okay, is equals to whether we made a profit or a loss. Okay, and when I say selling price, I'm saying selling price that we sold this vehicle for. Okay, right? But now, before we can actually calculate this, so we know that the selling price that we sold this asset for was for 64,500. Because remember, we're concerned with the amount exclusive of that. Okay, because we know that that portion belongs to SARS, it's not ours. Okay, but now to calculate the carrying value, we need to remember the formula for carrying value. Let me actually put it up here. Nice, make it nice and neat. So CV, carrying value, is equals to, okay, let me do it this way. Your cost or the price of the asset to us, how much we bought it for when we first got this asset, minus the accumulated depreciation will give you your carrying value. Okay, so here, what was the cost of the asset to us, exclusive of that? Here you can see we removed it out of the books, this 87,500. So I'm just going to put this in brackets, 87,500, okay? And then the accumulated depreciation, we also removed that out of the books. Is this 42,700? So 42,700, okay? And then that, so now we can now calculate, did we make a profit or a loss? All right, so here you can already see, as Abigail was saying, we did make a profit, because here you're probably going to come up with 40 something, all right, thousand minus the 60 something thousand. Okay, so let's quickly calculate what that was. Okay, let's just do this. Right. Okay, so I want us to be there. Okay, cool. So we are saying okay, so let's start here. Let's just do this. Okay, then minus 42,700. So we get 44,800. Okay, cool, no problem. So we're saying 64,500 minus 44,800. I hope I'm right. Yeah, I think that's right. See? Okay, so yes, that's the profit that we made. Okay, so 19,700. Okay. So since we made a profit, okay, let's see, is there any comments, any thoughts? Okay. Okay. All right, so we're still good. All right, cool. So since we made a profit, now and this was what I was teaching my group the last time. In fact, is it yesterday or the day before? Day before. When I saw group three. Group three, when did I see you guys? I think I saw you guys on Tuesday. Yeah, I saw you on Tuesday. Yeah, the day before yesterday. Cool. So now, if you go back to your slides again, what do we see? We're on step 4. We don't know. We now know we made a profit. Okay, so since we made, can you see here? It's either debit or credit asset disposal. We don't know. It's dependent on whether we made a profit or a loss. Okay. If we made a loss, then we credit. So you're following this pattern here. Profit, we're gonna debit asset disposal. That means if we're debiting asset disposal, we're gonna credit. Can you see? Debit, credit your profit on disposal of the asset. Okay. If we made a loss, can you see that's the second one here in red? You're gonna credit your asset disposal. Okay. And you're going to debit your loss on that asset. Okay, but so that's just the steps for you to know. Now I want to teach you in such a way that you know what to do, not just what to do, but why you are doing what you're doing. So here's the logic. So when you make a profit, right? A profit to us is an income. Okay, I'm going to put income in brackets here. Okay, there we go. So we know incomes increase on which side? Somebody tell me in the chat real quick. Incomes. Whenever we have sales, whenever we have dividends received, whenever we have rental income, what do? Do we debit or credit? We credit, okay? We credit. So since we, thank you so much, Abigail. So since we are now crediting because we have an income, that means that here, we're going to credit this income, okay? We're going to record this income on the credit side. So profit on sale of vehicle. Or you can even just, instead of saying on sale, you can just say on sale and then not put of and then put vehicle if you want. Save you some ink. Yeah, I'm always looking out for you guys. You see? Saving you ink even. Can you imagine? All right, cool. So 19,700. Then obviously we're now debiting asset disposal. Okay, right, and here it's 19,700. Okay, can you see that there? Right, and then obviously here I forgot to put a narration here. Sold vehicle on credit. So you need to put there, and here we're saying profit on asset disposal. Disposal. Oh yeah. You'll obviously make this neat. You can centralize it. Okay. There you go. All right. Cool. And you're done. okay, in the general journal. Okay, can you see you've done all your steps? Okay, now, are there any questions, any thoughts? We've dealt with the second side of it. How did you calculate the 87,500 asset disposal on the 31st? Excellent question. Thank you very much, Lee. Let's see. How did we calculate that? Okay. Remember, on the 31st, what's happening here? We're saying we're removing the cost of the asset. That's step one. That's the agenda for step one. So when we look in our textbooks, we saw, the cost of this asset in the table there, it says cost, and then it says 100,625. Okay. So, but then it says in brackets, can you see cash? And then it says including VAT. We know that we want the VAT exclusive amount. This is annoying my eyes. Okay. We want the cost exclusive of VAT. So we say 100,625 times 100 because we want the VAT exclusive. Okay. Maybe just as a quick recap. Remember we said 100 is for your VAT exclusive amount, then 15 if you want your VAT amount, okay, and then 115 if you want your VAT inclusive amount, right? Okay, and then remember, so why did I apply that formula? Remember, we're saying what we want. Remember, it's just simple proportion divided by what we have times what we have, but now random amount, okay? And that will give us whatever we're looking for. So here we said, okay, what do we want? What we want is the VAT exclusive amount, which is 100. What we have, however, is the VAT inclusive amount, which is, can you see what I'm doing here? What we want is this, the VAT exclusive, which is 100. What we have, though, what we have is the VAT inclusive amount. Then we're saying times what we have random amount, which is this 100,625. Okay, and then that's how we got the 87,500 if you punch that into your calculator. Okay, I just thought I'd explain the logic as well. I hope that answers your question. Just give me a thumbs up if you're good. Awesome stuff, Lee. Awesome stuff. Yes, Mr. Zungu, what would you like to say? Feel free to switch on your mic or use the chat, whichever one works for you. Bahati, thank you. Glad to know you are good. Glad to know you're good. Okay, awesome. Awesome, awesome. Right, okay, whilst I wait for you there, forgotten who raised their hand. I don't know, maybe it was a mistake. Okay, Vika, thank you. Abigail, thank you. Storm, and Edwards, thank you as well. Thank you. Cool. So guys, I want to finish up this exercise before I give you a break. So I don't know if someone raised their hand there. If you want to ask, by all means, please feel free to do so. The general ledger is a whole lot more easy because now we are just doing what we did in the general journal, but now we're just, where we debited, we're debiting. Where we credited, we're crediting. So remember, step one is we're repeating the same process again. Step one is to remove the cost of the vehicle. So we know that the balance on the vehicle's account, now we can see it. So it's even easier mentally, okay? So here you're going to then say asset disposal. Okay, and here you're going to then do that 87,500. Okay, and then remember, and you see if you look here, what did we do? We credited vehicles, and here we're crediting it. We're just using the contra account, okay? We're just using the contra account under details. Then here under accumulated depreciation, okay? So here we would have had depreciation, okay? Let me just copy that right here. Because can you see this is the depreciation for every year that we've had this asset, okay? And can you see this is now where I'm showing you that this is a credit, this is a what? An asset, a negative asset, because it's increasing on the credit side. So remember, if you look at your table there, the first accumulated depreciation that we had was 17,500. Then the second one that we had was how much? 31,500. And the third one that we had, forgive me, it's not going to be so neat. Okay, let me try. Okay. The third one that we had was then the 42. No. Oh, sorry. This is supposed to be, it's supposed to be like this. The depreciation for each year. Remember, these are individual entries. So this actually is supposed to be, because when we're debiting depreciation, we're crediting your asset disposal. So this is supposed to be your 14,000 over here, okay? And then this is supposed to be your 11,200. And if you add those up, you'll see that you arrive at this 42,700. Okay. Now remember, step 2 is to remove your asset, your accumulated depreciation, and we transfer that or remove it to asset disposal. Okay. So here now we have the 42,700. Okay. Right. Awesome stuff. Now in the asset disposal account, wow, okay. Asset disposal account. Okay, let me skip that one for now. Let's go to step number 3, because asset disposal is the everything is getting transferred to that. I can actually complete the double entry now though. So first thing, remember we said vehicles we credited that. So here we're going to debit it. So here we're going to say vehicles. So you guys can see the double entry taking place. So this is now your 87,500. And this is why I'm saying, guys, you need to just keep going with the process. Okay. So in step 2, we debited accumulated depreciation with asset disposal. So here we're going to say accumulated depreciation. Okay. And that was the 42,700. Okay. Then step number 3, what's happening in step number 3? We're recording the disposal of the asset. And here we know that we now have a debtor. Okay. So here we're going to say, what are we going to say? We are going to say asset disposal and VAT. Asset, those are the contra accounts. Disposal and VAT. Okay. And I remember we sold this thing for, in the book it says 74,175. Okay. That's it. That's all we need to do there. So now we need to, can you see we debited here, so we needed to credit here, which is what we also did in the general journal. Can you see? Asset disposal was credited. Okay, so we're crediting that. And there what we're going to write is the debtors control. Where am I? Asset disposal. Asset disposal, and there we said this is going to be debtors control. Okay, and that was for, remember we had calculated the selling price exclusive of VAT over here. Let's go, let's see, exclusive of VAT, that was 64,500. So that's what we need to do here, 64,500. Okay, can you see that? Then we also need to record the output VAT. Okay, so that I've left in there just to save us some time. Can you see that? Can you see we credited output VAT in the general journal? Over there, we credited output VAT. All right, and there we just put debtors control, all right, as the contra account. Can you see that? There we go. So that's done. Okay, then final step is to now record whether we made a profit or a loss. To record whether we made a profit or a loss. And we had calculated that we made a profit. Can you see that 19,700. It was profit on sale, sorry, profit on sale was credited. Can you see here? We've credited it, okay? We've credited it. So again, we need to credit here, and we just say vehicle, asset disposal, and then we put vehicle there. Okay, guys, just give me 2 minutes to finish this up. So I just want to do the depreciation account. So every year we had depreciation, right? Here we would put accumulated depreciation. Just give me 2 minutes. I know it's your break already. I'll be done now. Okay. All right. So here's all that I want to show you. Remember, in the first period, we had depreciation of 17,500. Second period, we had depreciation of 14,000. Okay. And then the final period, we had 11,200. Okay. Now, depreciation account, as you saw in the last exercise we do every year, because it's an expense account. I don't know why we have a B here. This should be an N. This should be an N. Because it's an expense account, not an asset or a liability. Okay, so here we have profit and loss. It gets closed off to the profit and loss account. Okay, copy, paste, and then same amount. Remember, we're closing it off, so we're equal and opposite entry. Equal and opposite entry. 14,000, and then here finally 11,200. Okay, cool. Sorry, let me just drop this phone call here. All right, cool. And then so we've dealt with that. Then the last thing that we need to quickly do is profit on sale of vehicle. Remember, this is an income, you can see. So we also need to close this off to profit and loss. I think I may have forgot to do this step in the video for 2000. So for exercise 3.6, I forgot to probably close off profit on. I think there we made a loss. Okay, and then now we just need to record that in the asset disposal. Remember, here we credited asset disposal, or should I say profit on sale of vehicle. We credited that and we said asset disposal. So here we're obviously then doing a debit. Okay. Okay, so that is going to be a profit on sale. Okay, and then that's for vehicles. Okay. Right. Okay, and we're done, guys. And that was for 19,700. Okay. Last thing I'm going to mention, if you add these two together, right, and you add the debit side, you end up at 107,200. If you add the credit side, you end up at 107,200. Can you see that? So this is a quick check to see, did I do things right? Did I do things right? If your credit does not equal your debit on your asset disposal, then you know something may have gone wrong. But again, it's not the end of the world, okay? Because your marks are in all these little steps here, getting your folio right and so forth, debiting and crediting in the right places. Okay, right, guys. So that is it for the first session, guys. Yeah, as promised, I am done now. When we get back, I want us to do 3.8. Okay. So guys, take your break. If you have any questions, please, they're more than welcomed. Throw them in the chat whilst we're on the break. Then when we start our second session, which will start at 9, we can then start with those. We can then start with your question that you may have. Okay, guys, I'll see you in 10. Do enjoy your break. See you shortly.